trillions are changing hands. Will you benefit or be left behind? Will the next decade create more wealth or take it away? The world is undergoing a massive shift. Trillions of dollars are being moved, inherited, and reshaped by the wealthiest individuals. But what does that mean for the rest of us? Let's break down the biggest wealth transfer in history. What is the Great Wealth Transfer and why does it matter? Over the next 20 years, an estimated $84 trillion will be transferred from baby boomers to younger generations. This massive redistribution of wealth is expected to reshape global economies, industries, and social structures in ways never seen before. Some experts believe this transfer could create new economic opportunities, fueling innovation and investment in emerging industries. Others warn that it may further concentrate power among a small elite, widening the wealth gap and making it harder for the average person to build financial security. Technology, shifting real estate markets, and cryptocurrency investments are also playing a role. Younger generations think differently about wealth than their predecessors do, which means that money won't just be transferred, it will be reallocated and reinvested in new ways. So, what does this all mean for you? Will this transfer make wealth more accessible, or will it deepen financial inequality? Let's explore how billionaires and economic shifts are changing the future of money. Who holds the wealth that is about to be transferred? The baby boomer generation born between 1946 and 1964 has accumulated more wealth than any previous generation. Many of them built their fortunes through real estate, stock market investments, pensions, and businesses that have appreciated significantly over time. A major portion of this wealth is held in real estate and stock market portfolios, meaning that as boomers retire and pass on their assets, these markets could experience major fluctuations. How younger generations choose to handle these assets will determine the economic landscape of the future. Many boomers accumulated wealth through traditional investment strategies, but millennials and Gen Z have shown a preference for alternative investments like cryptocurrency, tech startups, and ESG, meaning environmental, social, and governance investing. This generational shift could lead to a major restructuring of financial markets. With trillions of dollars in motion, the question is, will this money help create a more equitable financial system, or will it remain concentrated among the wealthy elite? How are the world's richest people preparing for the great wealth transfer? Billionaires and ultra-high net worth individuals are not just sitting back and watching this shift unfold, they are actively shaping it. Many are moving wealth into private equity, hedge funds, tax shelters, and offshore accounts to protect their assets from economic fluctuations. Some billionaires like Elon Musk and Jeff Bezos are investing heavily in space, artificial intelligence, and renewable energy, betting that these industries will define the future economy. Others, like Warren Buffett, are sticking to traditional value investments, believing in the long-term power of stable companies. Tax strategies also play a big role. Some are using trusts, charitable foundations, and complex legal structures, all to reduce tax liabilities and control how their wealth is distributed. This has raised concerns about whether the super rich will continue to hold disproportionate financial power even as their fortunes change hands. As billionaires prepare for the next economic era, the real question is, will their strategies benefit society, or will they reinforce existing financial inequalities? How will younger generations manage inherited wealth? Unlike previous generations, millennials and Gen Z have different financial priorities. They trust decentralized finance or DeFi and cryptocurrency more than traditional banking systems, and they are more likely to invest in startups, sustainability, and experiences rather than real estate and stocks. Data suggests that younger generations value financial freedom over accumulation, meaning they may spend, donate, or reinvest their inheritance in unconventional ways. Instead of hoarding assets, many prioritize work-life balance, passive income, and purpose-driven investing. In financial markets, we're already seeing younger investors push for social and environmental responsibility. This could reshape entire industries, forcing businesses to adapt to more ethical, sustainable, and socially conscious investment trends. But will their approach create more long-term financial stability, or could their aversion to traditional wealth-building strategies put them at risk? Will technology accelerate or disrupt the wealth transfer process? Automation, AI-driven trading, and decentralized finance, DeFi, are already revolutionizing the way money moves. AI-based investment algorithms are helping manage large portfolios with minimal human intervention, reducing costs and increasing efficiency. Blockchain technology allows for instantaneous, borderless wealth transfers, cutting out banks and financial intermediaries. This could enable faster, cheaper transactions, but it also raises concerns about security, privacy, and financial regulation. The rise of digital real estate, NFTs, and metaverse economies has presented a completely new way to store and grow wealth. Some believe that virtual assets could replace traditional investments, while others see them as high-risk speculation. With technology advancing so rapidly, will it democratize wealth-building opportunities, or will it create new barriers that exclude those without access to cutting-edge financial tools? Will the great wealth transfer reshape the real estate market? Real estate has long been a cornerstone of wealth accumulation and inheritance. As baby boomers pass down their properties, the market could experience massive shifts in ownership, pricing, and investment trends. Some analysts predict that inherited properties will lead to an oversupply in certain markets, causing price drops in some areas while creating housing booms in others. Younger generations have different housing preferences than their predecessors. Millennials and Gen Z are less likely to invest in large suburban homes, as they're more interested in urban apartments, rental properties, and shared living spaces. This shift could mean lower demand for traditional real estate, with more focus on short-term rentals, co-living, and multi-purpose housing. With rising interest rates and increasing housing costs, many millennials and Gen Z struggle to afford homeownership even with inherited wealth. Some may liquidate their inherited properties, selling them to investors or corporations rather than keeping them as family homes. This could lead to more corporate ownership of housing, impacting rental prices and home affordability. The big question is, will the real estate market become more accessible to new buyers, or will it continue to favor the wealthy elite who can afford to hold and invest in prime properties? Will governments use the great wealth transfer to redistribute wealth? Governments around the world are closely watching this wealth transfer, with many seeking to increase estate taxes, inheritance taxes, and capital gains taxes to prevent extreme wealth concentration. The United States, for example, has debated raising estate tax thresholds to tax large inheritances more aggressively. Billionaires and ultra-wealthy families use legal loopholes, offshore accounts, and tax havens to minimize their tax burden. With trillions in motion, governments may introduce new financial regulations to close these loopholes, potentially making wealth retention harder for the super-rich. Some countries are considering universal inheritance policies, where a portion of inherited wealth would be redistributed to the lower-income population. While this idea is controversial, supporters argue that it could reduce wealth inequality and create more economic opportunity. The key question remains, will government intervention level the financial playing field, or will policies ultimately benefit the ultra-wealthy while burdening the middle class? Will the middle class survive the great wealth transfer? The economic divide between the wealthy elite and the struggling majority is growing faster than ever. While some will benefit from inherited wealth, many working-class families have little to no generational wealth to pass down, meaning they will continue to face financial hardships. Inflation, automation, and global economic shifts are making traditional middle-class jobs less stable. As billionaires and corporations amass more financial control, workers may have fewer opportunities for upward mobility, increasing financial insecurity. Some economists believe the middle class is shrinking, with many forced into lower-income brackets due to rising living costs, stagnant wages, and increasing debt. If financial policies continue to favor the wealthy, wealth concentration will accelerate, making it harder for future generations to achieve financial stability. The question is, will this wealth transfer strengthen the middle class and create new opportunities, or will it accelerate economic inequality, creating a world where the ultra-rich dominate while everyone else struggles to keep up? What will the great wealth transfer mean for the future? We are witnessing the largest financial shift in human history, one that could either bridge the wealth gap or widen it even further. Billionaires are positioning themselves to maintain control, while younger generations are rewriting the rules of money management. Technology is both a tool and a threat, offering new opportunities for financial empowerment while also creating risks for those who fail to adapt. Meanwhile, governments and regulators are struggling to keep up, trying to balance economic stability with financial fairness. Real estate markets, taxation policies, and class structures are all being reshaped by this transfer. For some, it will be a chance to build generational wealth. For others, it may deepen financial struggles. The real question is, will this shift create a more inclusive financial system, or will the rich get richer while the rest struggle to keep up? How do you think the great wealth transfer will impact the future? Let us know your thoughts in the comments below. Don't forget to like, subscribe, and hit the notification bell for more deep dives into the biggest financial trends. Thanks for watching. See you in the next video.